Last week we saw one of the signature growth stocks, A2 Milk, actually sort of meet profit guidance, but actually get sold down 20%. We also saw Bellamy's, another one that's been a stellar performer recently, go down around 15%. So there is a danger that people, I guess, who are paying up for stocks that are growth stocks are in danger of losing money because they're trading at nosebleed valuations. So when you have low interest rates, okay, that's one thing, but at the moment globally we're seeing interest rates go up. So there's a lot more skepticism that growth is going to happen in the future. So on the other hand, we saw some stocks that under the radar has promoted, Spices climb 15% off very little news, and we saw some positive activity from the rural services stocks that we've promoted, Elders and Ruralco. So we are seeing investors looking for value, and I think that's very encouraging for our style of investing. Smart Parking is an interesting stock because it got whacked 50% at one point. I think it ended up down 40% last week off the back of I guess some sort of fraudulent activity in their UK management operations. We actually backed Smart Parking a while ago when it was a little known company. Arguably it's still a little known company, but it was even less known back then. They had an interesting technology, but they also bought a UK car parking business that had a hole in their earnings through losing a contract, and they were gradually filling that hole. So we got in at 20 cents and then took profits at 30 cents. The stock climbed to 40 cents after it appeared that it was turning into a growth stock and they were turning from loss making to profit making. But it just goes to show when the market goes for growth, you have to be very careful because what we saw last week was that stock fall into a heap. So it's one of those stocks where, okay, we might have thought we missed out on some big growth, but we were actually prudent to take profits. Well, for those that remember, Spices is the reincarnated paper links. They had tremendous problems with their hybrid securities. They were their capital structure was basically causing the company to go under. They restructured the company to get rid of that capital structure and swap those preference shares for equity. And now I think we've got we saw a company when we covered it that was trading at a 40 to 50% discount to its NTA. Now that's the kind of value you can find in the market, and even though it's not widely known. And then if a fund manager said that they had some undervalued assets, the stock spikes 15%. So there doesn't need to be much good news for a company that is highly undervalued to improve. And also what we look for is a strong balance sheet. Like the company has $30 million in cash and positive cash flow. So what's not to like? I mean, this company is really well positioned to benefit, even though its industry benefit from cash flow and a strong balance sheet, even though it is in an industry in structural decline. We've been focusing on the agricultural sector for as long as we've been in existence, for the past 6 or 7 years, because we did see that growth in the Asian middle classes, in particular in China, and their desire for protein. Now, a lot of companies are benefiting from that, but some have, I guess, safer business models than others. Certainly with the likes of Elders and Ruralco, they've got very diversified business models. So they're in all sorts of different businesses that service the rural industries, from water provision to real estate, and to actually selling products. We like those companies, but we've made a lot of money from Elders over the past through a restructuring of their capital. But There is also tremendous cyclicality in rural stocks, which is why it pays to keep an eye on these companies like the Capillanos, the Tassels, the Select Harvests, which produce almonds. So, you can't use a set and forget strategy with these companies. You really need under the radar to be your eyes and ears. And that's why we're covering more of these companies this week. Sooner rather than later, we've got a lithium report coming up, which our resources analyst has been working very hard on. I mean, we had a couple of reports late last year, and the stocks are broadly up, but there has been some volatility in lithium space because there was a big decision made by Corfu, the Chilean regulator, with SQM, which is like, I think, the second or third biggest lithium producer in the world, to something like fourfold production to 2025. So there was a lot of fear in the market, but we've spoken to a lot of lithium executives, and we've run through the numbers, and we've got a pretty good understanding of what we like in the lithium space and indeed the battery space. So stay tuned.